there, very good morning to all our viewers who've tuned in to this live broadcast here on Moneycontrol. You're watching Opening Bell with me, Stacy Pereira. Let me quickly run you through a recap of where we left off with the markets last week. And well, the past week, even though it was a shortened one, we didn't trade on Monday, but we did see that significant activity in the broader market, especially the Nifty 50 index. We saw that reaching new highs every other day. 23,600 odd levels is where we managed to touch, but somehow always ending that whole week rather flat. The sensex, Nifty, both of them posting just about minor gains of 0.2% each, but it was the third straight week of gains for the benchmarks. And if you look at the broader indices, and that's what we're talking about, where the party really is, the mid cap and small cap indices both outperformed the benchmarks. And if you looked at sector wise, it was banking, sugar, fertilizer. Of course, we did have that impending GST meet that happened over the weekend, and a lot of these stocks were abuzz on back of hearing some positive news, and we'll be discussing the key takeaways from that 53rd GST Council meet as well, and we'll have all of our experts try to decipher where exactly the market is heading from here on. But before that, let me take you through all the top headlines. Now, Wall Street closed quite mixed, with the S&P 500 notching an intraday record as well as registering its 8th positive week out of the last 9. The Nasdaq as well as the Dow Jones, though, closed lower. And Asian markets are trading largely in the red or lower given the weak handover that we got from Wall Street. The GIFT Nifty is also suggesting a weak start for the Indian equity markets. And crude prices have gained for the second straight week, with Brent now rising above $85 a barrel as summer demand peaks in the United States. If you look at precious metals like gold and silver, those ones have slumped as the US 10-year yield has risen. The GST Council decides to roll out Aadhaar-based GST verification in a phased manner across the country. The GST on hostel accommodation outside of educational institutions up to 20,000 rupees a month has been waived off, as well as railway services have also been exempted, while the issue of rate rationalization on fertilizers has been referred to a group of ministers, or GOM. And Moneycontrol reports exclusively suggest that market regulator SEBI is suspecting some front-running and conducted search operations at Sandeep Tandon's own Quant Mutual Fund. A release by the fund says that it committed to cooperating with the regulator and will continue to furnish data as and when required. Well, we'll be talking a lot about what's happening there at Quant Mutual Fund. It is among the fastest growing mutual fund, and if you look at its small cap fund, that one particularly is perhaps going to see some kind of pressure after these search operations that were conducted over Friday and Saturday. We'll be discussing that, but let me also take you quickly through some of these F&O cues that you need to be watching out for. Now, if you did look at how the markets did close, well, we did fail to hold on to those gains that we saw. And profit booking and consolidation perhaps is the game at play, we would say, for the benchmarks at least. The Sensex falling about 269 points, closing in at 77,210. That's where we are at the Sensex, whereas the Nifty just about 66 points lower it was, but 23,501. So managing to hold on to that 23,500 levels. But it was the bank constituents that were really the ones that took a drubbing, ended in the red, and IT stocks on the other hand were the ones in the green after that Accenture report that came out. So overall, market breadth was in favor of the declines, and the advanced decline ratio was almost 3:4, we could say, for that last week that we saw. If you look at option cues, the put call ratio, or PCR, that we pretty much tells us the mood of the market, that one has dropped to about 1.04 on June 21st versus the 1.29 that it was. But remember, above 0.7 to 1 still indicates that there is a bullish sentiment or an undertone in the markets. Now, if you look at the stocks that are in your F&O ban list, well, the NSE has gone on to add Chambal Fertilizers as well as Granules India into your F&O ban list for today. Retain in that ban list is Balrampur Chini, GNFC, Hindustan Aeronauticals as well as Hindustan Copper, Indus Towers as well as Piramal Enterprise. The one that has gone out from the list versus June 21st is Birla Soft from your mid-cap IT space. So that's where we stand with the stocks that have been put in the F&O list. And if you look at the fund flows to tell us where exactly the money is coming out, well, there have been outflows overall from FIIs for the month of June, we could say that. But on Friday as well, FIIs were net sellers of about 1,790.19 crore worth of equity shares, whereas the DIIs did that heavy lifting and bought in about 1,237.21 crore worth of equity shares. This according to the provisional data that is put out. Now, if you also look at the India Wix index, and that one has been quite interesting and something that we've been tracking all since after the outcome of the general elections and what we saw happen there. Well, the volatility index has fallen for another session, we could say, on Friday, and it remains in that 12 to 14 levels. Now, experts do suggest that this trend may turn quite unfavorable for the bulls if this continues, and if we manage to slip below that 23,300 levels being that crucial support level, then that's where we might see some kind of further pressure and that volatility then climbing above that 15 marks. For now, the VIX or the fear gauge has fallen by 1.24% at 13.18 levels versus the 13.35 levels that it was on the previous trading session. Well, let's just understand where the markets are going and what stocks should really be on your radar. Remember, this is also the F&O expiry week for the June series, so we are going to see range bound trade rather, and this is going to continue perhaps. We've only been moving sideways all of last week. But if we break the 23,300 levels, Kush, let me get in Kush Bohra from kushbohra.com joining us this morning. Always a pleasure to have you with us, Kush. But how is one supposed to be trading in this kind of, what is the strategy one is to be adopting, at least for the Nifty at this point? We're touching higher highs every other day, but we're rather in that range bound manner. Do you think this is going to continue, and what are the levels that you would be tracking for this F&O expiry week?
Hi, morning, Stacy. First up, lovely energy for a Monday morning, and always a pleasure to be here. Well, you're right. We've been touching new highs for the last few sessions. But the one thing that's very clear is that the market is not really in a hurry to go out and break that 23,500 mark in a big way. We've not been able to sustain above that. So I think what will happen is the market will consolidate. Not surprised that the bias has actually turned negative this morning, and it could well happen that the markets could perhaps slip a little lower also from here, and that's not a bad thing. After the kind of volatility we saw in the early June, the first week of June, I think everyone's perhaps braced for a bit of a cool-off period, and that's what the market are seeing. I will not be surprised. 23,300 is where perhaps we could open today or we could test, but if that is broken, then perhaps the test of 23,000 is also on the cards. Again, as I said, the dips are perhaps around the corner, but also we need to understand one thing, that in the last perhaps year and a half, 2 years, except for those big event days, most of the dips that have come about have been shallow or have been swift, so they've been bought into. So any dip that you get towards the 23,000 mark should ideally be taken as an opportunity to create fresh long positions on the Nifty. At the moment, even with the 100-point dip that we are seeing today, I don't think the risk-reward ratio is still justified for a big long position.
What about the risk-reward ratio when it comes to private banks? Last week we did see a couple of banks start to participate, and then we also saw that bit of pressure that came in. So Nifty Bank, that one was almost up by about 3% the week before. How is one to be trading within the components of the Nifty Bank as well and the index per se?
So for the Nifty Bank, I think the bias still remains positive. Although if you see the PCR, it seemed a little overstretched on Friday, and hence we saw that kind of dip that come in, that we saw on Friday. So from here on, there is a possibility that it could consolidate with a mild negative bias, but overall the view is positive. Now, as the flavor has been, private banks will remain in focus, and even with the kind of rise that we saw last week, there is still a lot of room for private banks to go ahead and catch up, even just with the indices, let alone the move that we've seen in the PSU banks. So I think a fair bit of traction will remain with private banks. So the likes of HDFC, of course, but even the likes of Axis and ICICI will perhaps be in focus. So here too, if you get any dip towards, let's say, 51,000 or maybe just under that, should be taken as a buying opportunity. We're more constructive on the Nifty Bank than on the Nifty.
Right, so now the needle is pretty much tilting towards the bank Nifty, and there could be more opportunities there. Look for dips if you're looking to get in a couple of those constituents of the bank Nifty. Just do stay on with us, Kush. Let me get our viewers up to speed with a couple of block deals that we are getting to hear about. Today in focus likely is going to be CarTrade. Now this after sources tell us that Hydel Investment as well as Macri Techie, both of these companies are likely to sell about 7 to 3.4% stake each in CarTrade, and this will come at a floor price of about 820 rupees per share, which is somewhere to the current market price. It looks like a discount of about 4.3%. The deal size also, if you look at this, is somewhere around 400 crore rupees. This could also see an upside of about 100 crores. So about 500 crores is what they're looking to raise through this stake sale or via these block deals, is what we're given to understand. There will also be a 75-day lock-in period for the sellers if this block deal does go through. And let me tell you that Hydel Investments holds about 17.36% stake. This was by the end of the March quarter in CarTrade, whereas Macri Techie has about 16.3% stake in the company at the end of March. So that will be interesting to see how one looks into this. But let me also get Kush quickly to ask him about, we've seen a galore of block deals. If it has to be, just last week almost 25,000 of that trade that we saw in the cash market was mostly because of these block deals. Are they, for a retail trader or for somebody who is very interested in knowing how this really works, what would you suggest for when it comes to these kind of trades?
But just take these as an opportunity to identify stocks where the FIIs or the institutions are keen, and any kind of dip that you get, because or on the basis of these block deals on an otherwise upward trending stock or a stock that's been doing well, should actually be grabbed as an opportunity to go long. Of course, you'll have to do your research, but as a dipstick, this is the idea. You can apply when you hear about these block deals.
Right, quite interesting. And it was because we are having a whole host of IPO, and the primary market also is where people are quite gung-ho about entering, and we're seeing almost in this week alone about 10 listings that we're going to see, 2 from the main board, but 8 other from the SME segment. So it's going to be quite interesting to see where a retail investor perhaps wants to see opportunity, and whether this market really gives them that chance. But if you're not investing directly through markets, the mutual fund route is of course another way that people park in their money. And now one is going to be quite interested to know that there is research and Moneycontrol's data that is showing that Quant Mutual Fund is rather going to be in focus. This after SEBI has conducted a search operation at Quant Mutual Fund's premises in Delhi, Mumbai as well as Hyderabad. The searches were conducted on Friday as well as Saturday, and were conducted on allegations of front running. Now what exactly is front running? It is of course different from your insider trading as we know it, but it is being pulled up for that matter, which is something that could be you are going to see small cap stocks rather come under pressure, especially those that come under Quant. Now front running is that illegal practice there where intermediaries, that is your dealers or brokers, go on to exploit the position when they're booking in profits. Now this is what SEBI has alleged against Quant Mutual Fund, and which is why you're going to see a couple of those stocks that are Quant does have a big holding or more than 5% holding in. They are the ones that we are perhaps going to see under pressure today. In fact, just to bring our viewers up to speed with which of these funds which of these stocks are rather going to be seeing some bit of pressure. Well, there is Century Inca, there is Orchid Pharma, there is also Stride Pharma. All of this is where Quant MF has more than 5% stake, in these, or that's how their allocation is in the small cap fund. Well, let's also address market open for you there. We are about 130 odd points lower, so we are opening up at that 23,300 levels, and just like how Kush and me were discussing, that's where almost 0.5% of losses we're seeing for the Nifty on those expected lines. Same in for the sensex as well, where we are almost 0.5% lower for the sensex, 300 350 odd points. So that gap down start for the markets is what we were anticipating and what we are seeing. The bank Nifty too seeing almost more than 0.5% lower, and mid cap, small cap also this time around not really managing to hold out and pretty much mirroring what the benchmarks are doing. So both your BSE small cap as well as a mid cap index rather seeing more than 0.5% of gains, whereas the small cap seeing about 0.2% of losses, whereas the bank Nifty there also down about 350 odd points that you're seeing shave off from the bank Nifty as well. Let's see the gainers and losers then, and which stocks are actually building this pressure, we would say, on the benchmarks. But for now, you're seeing the gainers on your screen. Sun Pharma from the IT pack, ITC as well as Apollo Hospitals are among your gainers. So there is news flow, a lot of it coming in from the pharma pack, in fact, and we are going to be discussing that. So you have ITC and HUL also from your FMCG basket that are among your gainers, whereas losers also are pretty much, we did see a lot of auto stocks that were down and about in last session. You're seeing Maruti Suzuki once again there among those that are in the laggards. You also have Tata Steel, Cipla as well as IndusInd Bank from the private banking pack that are among your laggards, SBI as well as Bajaj Finance and Adani Port. So those are your gainers and losers from the Nifty, we could say so at this point. But let me go get Kush back in, and we were talking about small caps, and maybe I'd want to get his view on how one is supposed to be trading, especially when they are building their portfolio. And you get to hear news when the stress tests took place. That's when we saw a big meltdown among the mid and small caps as well. Now you're hearing about news that of SEBI conducting searches on something like a Quant MF, which is among your biggest, almost 20,000 crores of asset under management. Does this make investors a little jittery, and how is one is supposed to be just waiting on the sidelines for news to pass by, or these could be also opportunity moments of opportunity that one can buy in?
I think this is an opportunity to buy in if you get the stocks any bit lower. Let's just understand what the SEBI is doing is actually in the interest of the investor. This doesn't really change anything for the company except for maybe a short term supply pressure, if at all that comes in. So I don't think this is too big a cause of worry for the investors or for those stocks also at the moment. So I don't really see this too much of a worry. You should remember the basics of investing, which is have a limited exposure, or depending on your asset allocation strategies and your risk appetite, have a defined exposure to small cap, mid cap, large cap. If you've got that in place, I don't think you've got anything to worry. In fact, as you rightly put, any kind of dip that you get because of this reason should actually be used as a buying opportunity.
Especially when you're seeing markets trade on newer highs, even when it comes to stock specific action, that could be a good way to be entering markets. Kush, do stay on with us. Let me address a couple of other stocks that will be in focus. I'm talking about a whole host of pharma names that we saw also among our gainers today. We did see there's Lupin, among your losers. We did hear of Lupin, which has received an IER, this from the US FDA on their manufacturing facility in Somerset in New Jersey. Now what they've got is a voluntary action indicated, a VAI, from the US FDA, and this is for their establishment inspection report that was conducted in the facility, which was inspected from May 7 to 17. So that is a bit of news flow that is coming in from Lupin, whereas also Cipla has got a US FDA issued 6 inspectional observations from their 483 for their Goa manufacturing facility. And now this one was also inspected during June 10 to 21st, so just about recently. And the company has gone on to say that they will be working closely with the US FDA and also address these kind of situations that have arisen and within a stipulated time. So they are kind of trying to contain the situation at this point. But Kush, quickly to you, how is one to be looking at the pharma space? That has been quite interesting, especially after all that we've seen with China and that anti-dumping coming in. We are seeing almost a turnaround because there's good realization also happening for at least the Indian generic pharma companies. Is there more value within the pharma space? Would you say so?
Very selectively, and if you see, there are a few names only which are actually perhaps doing well or attempting a breakout. A lot of them have, after showing some strength, gone into a bit of a consolidation mode. So I am a little skeptical here. We do have Lupin on our radar. The stock is consolidating and again taking support at that 1550 kind of mark that it has taken for the most part of this year. So that's one stock that we've got on our radar. If that support does hold on, then you could be looking at higher levels. Even something like a Dr. Reddy's, despite the kind of falling trend line resistance that we are seeing, once that is taken out, the stock is poised for an up move. But again, we're being a little cautious there. So very selective. Most of these names are now lacking momentum after showing some strength. So again, just wait and watch mode on most of these names at the moment.
Right. Kush, do stay on with us. We'll try and answer a couple of viewer queries in just a bit. But let me also introduce my next guest. Joining me now is Kunal Shah. He is the Senior Research Analyst at Carnelian Capital. Good morning, Kunal. Always a pleasure to have you with us here at Moneycontrol. I'm going to go off straight to this headline that we're seeing from, on Moneycontrol. That's the exclusive that we actually broke sometime back about SEBI going in after Quant Mutual Fund. Now, this is quite interesting because Quant has been among, one would say the poster boy when it came to mutual funds, growing in at some, super level, 20,000 crore more of assets under management, and especially their small cap funds were something that, actually did see that kind of good bumper returns. But when you do have, headlines like this, that they are being searched and being probed for something like a front running, does that make an investor a little jittery, and how is one supposed to be digesting this kind of news really?
For sure it makes one nervous, but basically in the overall scheme of things, for the overall market, if there are found sound fundamental stocks available at valuations which are lucrative or which are correcting because of this event, then it presents a good buying opportunity in those small and mid-cap companies, but otherwise, yes, from an industry perspective, it does basically, scare the investors, especially retail investors who have been participating in the markets through mutual funds.
Is making them a little bit jittery, one would say, and that has been a preferred way of actually investing. So these kind of headlines definitely take one aback. But let me also bring our viewers up to speed with a couple of brokerage notes that are coming on. One interesting one that was put out today by Morgan Stanley is on internet stocks. Now, they say that despite this sharp re-rating that we've seen in the likes of Zomato or Paytm and others, or PB Fintech for that matter, we are still seeing that they are constructive on these India-based internet stocks. They say that the macros as well as macro factors are aligned for these stocks to grow further. Rising dispersion of stocks could return implies pretty much a greater focus on your stock selection when it comes to these internet stocks. The framework weighs pretty much on operating environment and the track record. Of course, the outlook and valuation of these companies is something that you should be looking at before actually going ahead and investing. That is Morgan Stanley still likes Zomato as well as PB Fintech, which they say are ahead of the others. In fact, Morgan Stanley has also put out a separate note just on Zomato specifically, and if you see that particular call, they have an overweight call with a target price of 235 rupees per share. They are equating this to the fact that Zepto recently has gone ahead and raised quite a significant amount, and this means that there is more competition that is heating up within the Q-commerce space. They do believe that the profitability within the Q-commerce business as versus the current assumption is what something is going to play out, and which is why they continue to have an overweight call on Zomato. Quickly, Kunal, how are you looking at new age tech stocks if we have to, give a broader basket, and do you have any favorable picks within that lot, and why so?
So we have avoided so far this new age stocks largely on two counts. One is obviously the valuation concerns that were there, and more than that, basically while the opportunity size has never been the concern, for anything in India, and more specifically for this new age stocks. But basically, the cash flow generation has been a little weak. The profitability has been a little weak for all these new age players, and also there has been a lot of disruption that has been happening around across all that these companies face. Right. So far we have avoided basically this space, but selectively, one has to. I mean, it takes a longer term time frame. Then selectively there are opportunities available in this space as well. But one needs to be cautious, considering the profit metrics, considering the cash flows, and on top of that, the valuation that one has to pay for this new age stocks.
So be specific within that, new age tech stocks as well, and we'll have their earnings that will give us some kind of idea as to where they're headed and whether that profitability that they are trying to focus on is something that they can sustain, down the line. Let me go back to Kush now and get a couple of queries answered quickly. Kush, there is one coming in from Pradeep, and he's asking your view on LIC housing finance. Now, we've been seeing quite a interesting move when it comes to these housing finance company after the last, when the cabinet approved that 3 crore worth more houses to be built under the Awas Yojana. So, what are the charts really saying when it comes to LIC housing finance?
Well, on the whole, the structure looks positive. It's just that, we are seeing a near-term topping out kind of formation, plus, some sort of profit booking along with the markets. I suppose it will be a good entry point close to, 715, 720 kind of zones. If you can get it, somewhere close to those levels, then perhaps a good, entry point where the risk-reward ratio will also become favorable. So 700 from there on will act as your stop loss. On the upside, you could look at 735, 745 as your target. So a buy on dip stock, the structure is positive. Perhaps some profit booking could drag it a little lower. So try and buy it close to 720 mark.
Right, so 720, you can keep that as your level, and I hope that answers your question. Another one, and quite interesting, and every time I pull up this stock, because there's not too much data on it, but perhaps Kush can at least tell us what a little bit the charts are really suggesting when it comes to IREDA. That one has seen quite interesting. In fact, today that counter is also up and about. What is really driving this, and is there more opportunity and value here in IREDA?
It's an interesting setup. One, as you said, there's very limited data, but from what we can see from at least a near-term perspective, this 195 mark is going to act as a near-term resistance, but this is also perhaps going to be the line once broken will perhaps push the stock higher in terms of, the momentum pickup also. So we are seeing some traction on this. Friday was, a big breakout with, with some volume. Now, again, it's close to that 192, 195 mark. My suggestion, if you're holding it, continue to hold with a stop loss of 185. Any new position should actually be accumulated once the stock crosses 195. As I said, beyond that, we see some momentum pickup, which can take the stock to 205 and 215 kind of levels also. And then again, the 185 level will act as your stop loss. So existing positions hold, new positions above 195.
Right, so hold your existing position and look for 195 on that counter when it comes to IREDA. Kunal, to you, I want to ask you what would be the right time, to have an exposure towards consumer discretionary space. Now, if we saw what happened in that whole week towards the election outcome, it was your defensives at play, and one said that in the long run, do look at your consumers, your FMCG stocks, and that's where you'll perhaps still not make as much losses. Would you also go ahead with that kind of narrative, and how are you looking at consumer discretionary space?
To my view, at least for the next 1 year or so, with the focus now on rural spending, I think consumer is one pocket basically which would be very interesting and money-making opportunity out there in few select stocks, because a lot of these stocks, have not done much in the last 3 to 4 years. When they were seeing a lot of pricing pressure, then there were volume growth challenges. Now with pricing pressure behind and volume growth coming back, especially in the rural segment, we will see good volume growth, which has not been there for last many years for this lot of FMCG companies. Along with that, margin expansion playing out, could see meaningful profitability growth, which has been flat for quite some time, which will basically lead to re-rating of particular select companies in this sector, and therefore we are quite constructive in selecting names when it comes to specifically fast-moving consumer goods, and we have recently made decent allocation in this particular sector with few select stocks. So in that sense, quite constructive on FMCG basket from next 15 to 18 months perspective, and we believe it should do reasonably good.
Right, quite interesting. Now, another area of focus has been sugar stocks. So we've been seeing quite some interesting swings when it comes to sugar stocks, and in fact, a couple of queries that have come in also on some of these names that we saw last week, because we had the government come out and increase MSP for a couple of crops. That is something that is also driving. They are hoping to see a big push when it comes to the agri segment in the upcoming budget as well. Would you want to put your weight around a couple of these agri tech or agri sector, in the next maybe just 2-3 months horizon?
Well, there are a lot of many. One thing for what has changed for the sugar sector for sure is basically the ethanol blending program. That has brought a lot of sustainability in the earnings when it comes to sugar stocks for sure. But coming specifically to the point that there has been a lot of action that have been taken by government when it comes to agri and rural spending like MSP. Now we are seeing increased allocation in fertilizer. All of that would kind of benefit rural India and agricultural related companies for sure. But to my mind, there are a lot of other sectors to kind of play this in a more sustainable manner, rather than playing it to sugar basket, so limited point, while there has been a lot of sustainability on account of ethanol for sugar stocks, but specifically if one wants to play the rural and the agri theme, there are many other opportunities available through which one can play this theme, and one which is discussed, is the FMCG space, right? There are a lot of agrochemical stocks which will also kind of benefit because of this movement. Right, that also could be one of the themes which can be played if one wants to play this particular event. That is farm loan waiver, increase in MSPs, increase in fertilizer allocation, etc.
Right. In fact, there's a lot riding on this upcoming budget, and in fact, today will be the first day of the 18th Lok Sabha's Parliament session that will kick off today, and that is pretty much what we're thinking. At least markets, while they're moving sidewards, are perhaps going to be looking at cues that they can take of where the government's focus is going to be in the next 100 days that they form this government, as well as what they're going to be putting in with all of the pre-budget activities that have already taken off. Kush, quickly to you, since we're talking about the budget theme stocks, there is a query coming in from Varsha Gajjar, and she wants to know your view on RVNL and whether she should be booking profits at this point. So that stock also, that counter has been quite interesting in the swings that it has seen. What would you suggest to Varsha?
My suggestion would be to book partially and continue to hold the rest of the quantity with a stop loss of about 405. A lot of these names have seen a fair bit of volatility in the last month, but I think it's not like the best is behind them. There could be higher levels to be made. Although the kind of returns that were made in the last 2.5 years may not be replicated, but that does not mean that the momentum will stop here. So on the whole, the view is to hold these shares, but also to keep booking profits along the way. So book partially and continue to hold on, for the rest of the quantity.
Right. Well, I'm going to have Kunal have the last word then and ask him about, what should one be positioning their portfolio like at this point in time. We do have the budget that's coming up, but what are the themes that one could bet on from a longer perspective and not in the immediate term? What would those themes be for you?
I think if you ask me, private banks is something which should do very good. Basically, consumer is something which we have already talked about, which should do very good. Particularly in the auto space, right, auto and auto ink space, where they have exposure to the tractor segment or two-wheeler segment, again is something which could do basically very well in the next 15 to 18 months. Select pockets in pharma and select pockets in agrochemical space also basically should do good coming in the next 15 to 18 months. And also basically manufacturing as a theme, we are going to see continuity as far as the capex spending by the government has gone, right? So that again is a theme which has got many legs to kind of go from here on and should kind of continue to do that. Too good. So these are all the pockets, basically where one should have exposure from creation of wealth perspective, from the next 15 to 18 months perspective for sure. And that has largely got nothing to do specifically with budget outcome.
Yeah, well, those quite a different mix that you have there of what sectors could perhaps continue well. But I'm going to have to go back to Kush to get him to tell us what is on his radar. Which are the stocks that you're looking at, Kush, and why, and what are you recommending for our viewers?
Sure. So a couple of stocks, on my radar. First one is Kirloskar Oil Engine. We've seen a stellar run in this stock, and we do believe that this stock has a lot of potential left on the upside. So even from a near-term perspective, if someone wants to trade, then you could consider this one with targets of 1410, 1440, 1350, being your stop loss. The other one is Shriram Finance. Again, this is a fairly steady kind of a stock. Was consolidating in a broad range for a brief while before it gave this big breakout above that 2600 mark. Gone into a bit of a consolidation mode, but the bias remains positive. So 2900, 2960 are the near-term levels to look at. 2770 is a good support zone. So that should act as your stop loss. And just as a disclaimer, we've recommended these stocks to our advisory clients as well. So Kirloskar Oil and Shriram Finance are the two stocks that we have on our radar.
Right, quite interesting picks there. Shriram Finance has been something that has been on this gainers list on a trot, one would say. But I think we're completely out of time. So let me thank both my guests, Kunal Shah of Carnelian Capital as well as Kush Bohra. Thank you so much, gentlemen, for giving us your time and speaking with us this morning. Let me also tell our viewers who are very interested in what all is happening in the primary markets. Now, a total of 10 IPOs is what we are, the last street is set to see this week. The biggest one among them is going to be the 1,500 crore allied blenders and distillers, or ABD as we know it. This one will open for subscription on June 25th. The public issue, there's also a public issue of about 171 crores on Viraj Iron and Steel. This one opens on June 26th. And of course, from the SME segment, a whole host of them that are going to be, hitting the market as well as listing on the brokers. About 8 of them public issues from the SME segment that will be listing, as well as 8 that will be coming on to the streets and opening for subscription. So it's going to be quite interesting. If any of these are of interest to you, you can be looking at these IPOs really. But with that, we're completely out of time. Right now, the market's still in the negative, or we could say in the red. So Monday morning, a little bit of those blues is what the markets are also feeling. Nifty 50 at around 23,400. So we managed to cross that 400 levels, whereas the sensex also, down by about 240 odd points. So that's where we are. But we have the rest of the trading day up ahead. So for now, it's a goodbye from the entire team that puts this piece together. But thank you so much for watching. Do please post us your feedback and also keep writing to us on our live feed so that we can have your queries answered by our experts, and follow us at the link at the bottom of your screen for all your other updates. Continue watching moneycontrol.com as well as the Moneycontrol app. I'll see you tomorrow.